Good morning, everyone. It's Trader Rob. Today is Monday, January 19th. Obviously, today we are celebrating MLK, so it is a bank holiday today. Futures markets are open till 11:45 is the cutoff period for most prop firms. But we are trading here today. Let's first start off with the ES. So the ES finally tapped into this new weekly band that I've posted in all my Sunday videos. It's been about 2 weeks, I think, since we finally tapped into this band. We did get a rejection off of it for right on the initial tap. We do have a setup that sits here on the ES at the 68.4875. I find it very unlikely that we revisit here this morning. But obviously, order book is extremely thin right now. So anything could be possible with it being as thin as it currently is. So we'll have that on our radar. NQ, the setup up here, this is really the only high pocket of volume, unbalanced volume that I currently see in the market. And it pretty much starts from the 25,373. Up until the 25,397 area. And again, it's a pretty big area right here. Only candle confirmation or footprint confirmation would I be interested in that area. And then in gold, just a small area here at the 4640.8 that I'm interested in. We'll see what happens when we get down here. I might mark up some targets here if price action gets anywhere near there here this morning. So today on a bank holiday like today, the reason why I was just a little curious on the markets is that we obviously had a lot of headlines, a lot of tariff headlines Friday, Saturday, Sunday in regards to Greenland, the EU. So that's really the piece of volatility that I was kind of, possibly looking out for here this morning. And I'm on the charts anyways, so I figured, why not? Let's see if maybe we could possibly get a small little setup here. And we are moving now, so this was a pretty good move to the downside here. Let's see what they might have left us here with now. This area right here, this looks a little sweepy up here. I'm not super interested in that yet. We'll see how we react right here. Let's get over the 1 minute. All right, so let's see what kind of reaction we might get here at the 25,274 up until the 25,282. This looks like a pretty decent reactionary zone right here. Gonna have to rely on my lower time frame footprint chart here, just because of volatility here. Maybe adjust my, let's go to my position size here. Morning, Chump Sauce. Morning, Flav. Morning, Eric. Travis, Eugene, good morning. Michael, good morning. Amar, good morning. Keith, good morning. Nordic, good morning. Well, the Cinderella story with the Bears is over. That was a heartbreaking game last night. I mean, they played a phenomenal game. I think they played. I think the Bears defense yesterday really came up huge. A lot of the, I mean, that throw by Williams to tie the game in the fourth quarter there was absolutely insane. But we've been with that. That's been the MO this entire year. And we had it. I mean, overtime, get the ball back. We're at the 50. We need about 15 yards to kick a field goal. And we threw that interception, which really hurt. I still feel like Seahawks. It's going to be the Seahawks or the Rams at this point. The Seahawks are the ones. I said it from the beginning. The Seahawks and the 49ers I thought were going to be very, very difficult. Obviously, the 49ers got kicked out. But they actually got blown away, which I was a little surprised at, even though I know they had some injuries and they've been overcoming a lot. Let's see, the ES. All right, so the ES is dipping here a little bit lower into this weekly band that we've got here. We'll see how long it hangs out here. It's definitely a good amount of volume. I just don't know how many volume participants are going to be out there today. Order book is still pretty light. ATR creeping up to almost 20, which is about a little less than half of the normal ATR for a typical day. Gold's not doing much. I think the NQ might be the only play. Morning, Steve. Yeah, I was going to talk about that. I posted in Discord and in my Signal service about Funding Ticks. They sent an email out last night saying that they were winding down operations. So I got a few opinions on Funding Ticks in general. One, while they were in, I mean, I want to say these last maybe 30 to 45 days, you know, the customer support was getting a little bit not as great. I think they were definitely had some they had some platform issues that they were kind of dealing with these last like maybe 4-6 weeks. Maybe about 4 weeks ago, back in December, I was, we were definitely noticing some things that we really didn't see for the first few months being with Funding Ticks. I will say they did pay out. We received about, I think, almost like $17K in payouts. They had moved two of our funded accounts to live. And I think that was kind of a predetermined move based on what they ended up doing yesterday. The way that they shut down the operations, I have not seen any other firm do anything even remotely similar to it. They came out and said, if you have an active evaluation, we're going to refund the entire valuation regardless of where you're sitting at in profit or loss. If you were in a funded account and you were past the payout criteria, they were going to give you a 20% split on the profit that you had and refund you the cost of the instant funded account or the cost of the, how it is that you got to funded. For those, like the situation we were in, where we were pending live accounts, we had about $6,000 in profits on those accounts, on those two accounts. So they sent an email like maybe 4 or 5 minutes after it, stating, your cut of that's going to be $2,000. And they could have just said, we're closing operation. We don't have money. We're not paying anybody out. So the way that they handled the closure of it, and I know that they're owned, there's a bigger side to Funding Ticks with Funding Pips. So I think obviously reputation for them was going to be kind of crucial there. But I think in general, the business model must have obviously not been working. They weren't as aggressive with their discounts as I see some of the other firms. They were newer. I think that they were kind of dedicated a lot more into the Forex space, and they kind of jumped into the future side of things. And that market is pretty saturated right now with some pretty good companies. Obviously, you've got established names like Apex, TopStep, Tradeify, Take Profit. But there's also lessons to be learned there. I mean, if you're in the prop firm game, it's definitely a situation where you definitely want to diversify your portfolio of assets under management, especially if they're funded. So I was extremely quick on taking payouts in Funding Ticks whenever they were available, just because of how new the company was. And in the end, it turned out it was not sustainable. And I don't necessarily think that how they closed will be a standard for how other companies that might fail in the future go down. I don't think you're going to see many companies do what Funding Ticks did. And I think that the only reason why they did it is, again, because they do have a bigger company, kind of backing them, their core business, which is in the Forex side. I think otherwise, if it was just a standalone prop firm, and they made the decision to close, I think that nobody would have gotten paid a penny. Now, I will say, Random, you brought up Lucid. Lucid, in my opinion, and I don't say this a lot. I really keep my opinions really to myself in general. I mean, I I show you guys the firms that I'm personally trading with, which I traded Funding Ticks, traded Tradeify, Lucid. But Lucid is much newer of a company. But I'm going to say something, and I said it on stream last week. There is a huge niche to be filled by Lucid that I think they really tapped into extremely well. And that was really kind of basing themselves off of the Top Step model with a few add-ons, a few additions of the instant funded. But their core profit targets, payout schedules, rules are very similar. They mimic Top Step extremely well. And I think the biggest hurt that Top Step currently has is their platform, is their trading platform with Top Step X. I mean, I use it. I trade on Top Step X as well. I have 2 funded accounts with Top Step. So the fact that with Lucid, you're getting the same rules as you're getting with Top Step, are very similar rules, but still being able to trade with Trade of 8, NinjaTrader, I think there's a huge void that they kind of came in and filled right away. So I personally, even though I'm just in the evaluation stages, my wife did pass her evaluation last week, so she is already funded with Lucid. But I've got 3 accounts with Lucid, 2 of them, and I made a mistake when I ordered them. 2 of them are Flex, one's a Pro. I wanted all 3 of them to be Flex because I think that's the way to go. But I ended up taking a trade last week on those 3 accounts, and the 2 Flex accounts both took $1,250 profit. And then my Pro account lost that day because that one hit the daily loss limit on the Pro account. The Flex do not have a daily loss. So I had a 15-point stop, 15-point take profit. And the 15-point stop was enough for the Flex accounts to take the profit on there. But the Pro, I think it's got $1,200. And I mean, I'm in the evaluation stages. I'm a lot more aggressive with Apex, with really all of them. I'm not in the mode of staying in evaluations for several weeks or a month. You either pass them or you fail them and you get right back on the horse and you try to pass them. I mean, the only way you're going to get paid is to get into the funded stage anyway. So that should be your main goal, is getting there as quickly as possible. So 2 of my Flex accounts are plus 1250. I only taken 1 trade on those. And then my Pro's down 1250 because, again, it didn't have enough stop there. So I don't have experience yet with their payouts. I do have experience. I did go into their customer service, their chat, because originally I thought I had 2 accounts that were the exact same account numbers. And I looked at it like 15 times and I still, all right, let's see what kind of reaction we get here. So I'm in a 10 point ATM right now, just because volatility. Let me just check volatility really quick. Yeah, so we're still hovering around 20 on the ATR. So obviously much less than normal. We'll see here. All right, so there was a tap right there. Small tap. All right. All right, I am in. Let's see if we can get a quick reaction here or not. Looks like it might come after this secondary level here. Let's see if I bump this. I don't really want to bump this up too much. Let's see if we get pretty much tapped in there. They could just be looking for liquidity at this point. All right, so we did tap into that secondary reactionary point there. Let's see if that was enough. Now my line's stuck. My line's stuck here. Yeah, order book is pretty thin, so we'll see. 250s, just all the way down here. I mean that they left a pretty good chunk of volume down there, but they could want to come back down here and revisit here. It's a lofty goal, but it's possible. Alright, so got knocked out of that one. Well, I took a stab at it. Went lower position size, so it wasn't too bad today, but it's a pretty strong move here. What else is next? That looks somewhat juicy. So they pretty much just swept all of this. Rid of these guys so we can get this off our chart. Well, to me, this area up here at the 25 338s looks a lot more appealing to me. Let's see what we get here. I don't think this is going to give us much, but let's see. we did get a footprint confirmation on the lower. We got a footprint confirmation right here. I don't know why I was looking at this one, but let's see. Let's see if they still want to continue to pump this. A lot of positive delta here. I think the black accounts on Lucid is just a play on their Black Friday sale that was 40% off. So I believe that that's just the term that, or the play off on that. Could be wrong, but a lot of positive delta right here. Let's see if we can get a flip here or not. ATR creeping up to about 22. Yeah, and Michael, thank you for bringing that up, because that rule alone, I think, also really hurt them a lot on Funny Ticks, and that's that they did that 1 minute rule where you had to be in a trade for longer than a minute, and on the NQ, that is, you're pretty much taking away all scalpers out of that equation. So I think that was kind of a nail in the coffin there for them too. Yeah, Arshak, I thought that would, so I'm going to be posting a video on Discord today, or on YouTube today about Discord. So we did get a footprint confirmation there on the lower. I just don't see my bigger time frame footprint chart just doesn't look very appealing right now at this zone yet. I think I'd rather take a look and see what happens right here at this 225, 338 kind of zone. So in Discord, I revamped all of the channels. I deleted a lot of the channels as well. There's about 4,400 members on Discord that I have. And what I am going to be doing starting tomorrow, and there's a video that's going to be explaining all this coming out today, but I figured I'll share it with you guys. At 7:45 a.m. every morning now, so from 7:45 to 8 a.m., I will be live charting up my 5 and 15-minute levels on the NQ, the ES, and in gold, so that you can kind of go in and see how I map out my levels each morning. And then starting at 8 a.m. Till the, well, pretty much till the 15-minute Rob reversal time period comes to an end, I will be trading all of my strategies. Now that's upstairs in my workstation, which is what I've been doing since I moved down to my studio in the basement. I've been trading those strategies strictly upstairs. And now I figured I'd let everybody kind of see those trades in action, see what the results were. Today is trading just in Sim, so I'm on, I think I posted in the comments that I'm on Sim up there right now, as it being a bank holiday, and It wouldn't fit the 15-minute Rob reversal time period at all. That goes till about 1:15. So yeah, some updates coming up on Discord. Just trying to see if I can kind of get the engagement a little bit higher on Discord. I think it's pretty much the same handful of people that are always commenting. So, and I know a lot of people are trading the strategies that are on there. So. Morning, Key. Well, Darp, I gave one up a Derpy Ninja. Gave one out on Friday, so I'll let you know when the next giveaway will be for it. So this looks like a continuation model to the upside. So let's see what we get. Should be a pretty high reactionary zone here. We did tap into it right there. Still seeing, okay, we flipped to positive delta. No footprint there yet. Bigger time frame, we got a, well, not really. Not really. See if they tap in a little bit more. Yeah, silver's a beast, man. To be honest with you, I don't have it up on my charts. So it's not an instrument that I really follow. But that can make you a baller or make you broke pretty damn quick. It's just an unbalanced area in the market off of that push to the downside. I think right around 830. All right, now we're starting to see some kind of that looked like a nice little footprint confirmation right there. See if we get a push down here or not. this right up to here. And we got unbalanced below us. We got the 22s, which is right here, and it's not that great of a risk to reward profile. Kind of fighting the trend here. So the 22s right here have got an area that they're probably going to rebalance pretty quickly. I'm hoping that maybe we can get a small little tap and then a little wick right into our TP. But we'll see. It's the first real footprint candle on the higher time frame that I saw all morning, so let's see if that plays out. I'm on NinjaTrader. They kind of have a little wall here that they're going to get to. And like I said, they're going to tap into the 25-322. Just for risk to reward is not the greatest on that. Hoping maybe we can get a little sweep there, but they can break through there. And my TP should be pretty secure. That's really the only... Could be, if they break through that, we could see a larger move to the downside. Let's see if they break through right here. This is where you're going to see some reaction. There you go. There's the reaction. Let's see if they can follow through. This will determine the outcome of my trade right here at the 322s. Still see buyers coming in. Let's see if they could break through. Yeah, I guess I could have taken 5 points on that, but my risk to reward is not that great on this one. So let's see if they can at least just do a tap right underneath it. They tried. Get through here, we could see a bigger move to the downside, but they got to get through this. Got to get through this area right here. All right, nice trade. I knew that was going to be a difficult area to get them past that 322 area, but they finally did. All right. One winner there. Looks a lot more dramatic on the candlestick charts than what it really is. Obviously with the lower volatility, my targets were a little less, but did mention that there could be a bigger move to the downside. It was the first footprint confirmation that I saw in my higher time frame all morning, the entire morning. So kind of felt pretty strong on that And again, I knew that we are going to have a little bit of a problem at the 322s, which you guys saw it did. We tapped right into the 322s. We got a good reaction pretty much past my entry. And then I said, if we can get past the 322s, my TP will be definitely secure and possibly a larger move to the downside. Nordic, you can trade the automatic. Let me just pull it up so that everybody understands what I'm talking about here. So on my site, which is robstrades.com, if you go into indicators, I have all of my mechanical rule-based strategies listed on there. So if you go down, it gives you the rules of the exact trade. So I've got a setup on the NQ, which is my 15-minute Rob reversal. These are the rules right here. And then if you go down, you'll see that there's two indicators that you can download. There is a 15-minute reversal, which is a strategy. This will automate this entire rule-based system right here. It'll automate it into NinjaTrader for you. If you don't want it to trade it for you and you just want the indicator, I paid somebody to create this indicator for me. This just maps it on your NinjaTrader chart. So this will trade it for you automatically. This one will just throw up the indicators on there. And then you can obviously watch the video on YouTube that explains the entire strategy. If you go down a little bit more, I've got a strategy in oil. So that's on here as well. Here are the rules for the oil strategy that I have. And then you can also download the strategy for it for NinjaTrader, which will again trade it for you. We'll trade these exact rules, the exact time frames that I have here for these rules here. Those will be listed on there as well. So you can download that one. And then my my strategy in gold. So all three of them are 100% mechanical, 100% rule-based strategies. And there is the rule set for only one session in gold, which gold's been killing it on this strategy. And here's where you can download that strategy. So you just install it as an add-on to your into NinjaTrader. You would open up a chart for gold or for oil, activate the strategy, make sure that the time zones are to your, because everything that I post is in Central Time, CST. So if you're in Eastern or Pacific or wherever you're at, just make sure you're making the adjustments for the trading times of the strategy. And yeah, they're all in there and they're free. So you can download, you go in them, download them. If you go into my strategies tab, again, it'll explain all the strategies that I use. This is my 3-part series on volume that I have on how to map out my levels. This is the video that you want to see for mapping out your levels. This is how I incorporate the volume profile, and this one is how I kind of put it all together. And then I obviously have the strategies here for gold, oil, and the 15-minute Rob reversal. Which prop firm are you using for NinjaTrader currently right now? As funding ticks faded away, I have Take Profit, I have Tradeify, Lucid, Apex. Oh, it's funny because everybody always gives me shit for my profile picture in YouTube. But I'm like, you know what? It's been there from the original. Why change it? All right, let's go back to the chart. Let's go back to the regular candle chart. Get rid of that guy. Core Gold is not doing anything today. ES is just kind of hanging around on this weekly band. Did make a little smaller push here. Kind of surprised about this. These weekly bands are pretty impenetrable, man. Now, the only thing that's not working for today is obviously there's very little volume in the market right now, so there's always that. ATR is dipping a little bit here down to about 21. And I know this is going to sound extremely counterproductive, counterintuitive, and not much sense to many people, but I really don't have a huge intention to grow the YouTube channel, which I know sounds ridiculous, but with growth comes growth problems, and I'm extremely comfortable in the group that I have, in the group that I surround myself with in the trading space. I really don't have anybody that causes me any drama. I'm a very transparent type of trader. If anybody ever has an issue with really anything, I respond to them, I think, extremely quick. Pretty responsive to the chat as far as the questions. And growing the channel creates other sets of issues. And if I'm going to be in front of the charts, I don't really mind it. Like in the beginning, making the decision to go live was a huge deal because, well, there's a lot of things that go into it. My biggest concern going live, and I've said this a few times, but my biggest concern going live was I did not want to change how I trade. And no matter what anybody says, the truth behind it is when you're in front of 300 to 500 people trading, there's a very, very small part in the back of your brain that always wants to stay green, that always wants your reactionary points to work out like you map them out. Now, I have some very good training with the signal service because I've been under pressure since February to perform, and I have. So I knew that my strategy is great. I know that I know how to trade well. But when you get in front of an audience, as small as mine it might be, there's always going to be that thought in the back of your head, and I never wanted to change the way that I trade. And I didn't want to. I don't want the chat to affect, hey, why did you take that trade? You're fighting an uptrend. Like today, I was fighting an uptrend on this. This is an uptrend. You can't deny that, and I fought it here. I lost. I get it. But I just take the setups that I see where the reaction are, and I got my confirmation here. Now, did I wait for the higher time frame confirmation? I did not. I even made a comment as we were coming up that I'm probably going to stick to the lower time frame footprint confirmation, and that bit me in the butt right there. But I learned. So I got to the next area here, and I waited for the footprint confirmation, which is exactly what I got here. Red footprint candle, positive delta. This is a perfect setup for me. Could I have gotten my 15 points that I normally would have gotten? Yes. Is today half of the ATR that we normally see? Yes. So I figured it's probably prudent to lower my take profit. It wasn't the best risk to reward. I get that. My risk on this trade was closer to probably, I don't know, 15 points to take 10. Not the greatest risk to reward, but I have to trade with what the market gives me. And you guys see that my take profits are very dynamic. I see what the market wants to go for. I don't necessarily see the market's going to give me 15 points. The market's going to give me 20 points. No, I like to map out where I see. And what did I say? If we break through the 22s, we've got a very good chance of going down even further, which is about another 15 points, if not more, to the downside that we've had. I got out right there, 31 points. So market would have paid me. But today, obviously being, a little bit of a different type of trading day, I gave with what I took, what I thought the market would give me. This is the best way that I can explain it. Sailor Red, no, I don't. And I'm going to be honest with you. The reason I have it in my volume masterclass, I've got 11 modules, probably 13 now. Here's the reason why I don't put a video out on my footprint confirmations, which personally I think was the final piece to my trading puzzle. Was because not everyone, I would say probably less than 10% of the people viewing these streams, or in general, I'm going to even go with a lower number than 10%, have even the ability to put a footprint chart up. So if I create a video that is showing, this is what I use for my order, for my entry confirmations. One, I am going to probably inundate myself with questions. And two, I'm going to be putting people in a position where they do not have the availability for getting those footprint charts. And two, I don't want to make them go out and purchase either change their platform or get into a data subscription that allows you to have the footprint confirmation. I just don't think that's cool. I don't think it's fair. But yes, in my volume masterclass, you're paying for the masterclass. There's an investment there. It's $195, so there's an investment into that instruction that I give out. And yes, I go into the footprint confirmation, what I'm exactly looking for, and I'm going to even revise that, because now I'm not even going to get into it, but there's even things on the horizon that I'm currently doing that is working out extremely well with the footprint charts. And those will be added into that masterclass as well very shortly, because I think it's a fantastic, at the bare minimum, you've got a candle confirmation, that you can use. So I go into that, which is everybody's got at least the candles on their chart. Granted, I know maybe some don't have the 30 or the 15-second NQ candle. I know TradingView's got a limitation to 1 minute unless you're in a premium subscription, but most platforms have the ability to get down to the very low time frame, which is where you need to be at for the NQ. The ES, you could probably get away with the 30-second or the 1 minute to get a confirmation from my high areas of reaction. Now, on the levels, you don't need to do that. The way I teach my level strategy, those are not needed. So footprint confirmation is not needed. Granted, if you have it, 10 times better. But yeah, that's the main reason. It's not because I'm lazy and I don't want to do a video, or I want to give out my strategy. I mean, everything that I pretty much do. If you guys have been watching my streams, I pretty much show you guys exactly what it is that I'm looking at. For the most part, that I have the availability on the screen space that I have here. So this will be an interesting little pocket here now. This almost could be another reactionary point right here. I don't like taking the same zone twice, but this could give you that secondary. And there's some areas down below that I want to take a look at as well. But I typically do not trade the same area twice because it's already done what I expected it to do. It's kind of, so if you've got like a wall there of defense and the first incoming grenade or missile hits it, it's weakened that wall, but it reflected it. So, I mean, it reflected it. It gave the move to the downside that I was expecting. But now this is now weakened. So this line of defense here has gotten weakened. And yes, you could get a secondary trade out of it. I do see actually quite a few of them do working out. But on a day like today, just to me, with that being said, maybe we get a footprint confirmation here, which would be pretty crazy, but I don't think we will with that negative delta there. So yeah, I typically don't like trading the same zones twice. Morning, Coach Cleats. I'll be right back. Thanks, Michael, for the heads up on the IB. I should just keep it on the chart, but the issue I have is I like keeping my chart as clean as humanly possible, so I usually turn it on about 5 minutes before, but sometimes it'll bite me in the butt. So yeah, we did get a reaction here. I don't think that there was any type of footprint here. Let's see. This was not a footprint on the higher. The lower did give you a footprint right here. No, actually, this one gave you a continuation right here. That was nice. You don't see those a lot. So this would have been your footprint confirmation. If you guys take a look at this candlestick right here. Okay, closed red, positive delta. That would be an entry model for me on the lower time frame. And you can see that market did not, it respects this area because you're flipping that buying pressure coming in. It had positive delta. So the buying pressure was stronger than the sellers. And they still were able to flip this footprint red. That's why it's very, very powerful tool for your order confirmations. And you can see that that was the move. So again, you could scalp the secondary retaps, even though this is not the exact area of the first trade that I took, but it's that origination move to the downside. It was unbalanced, and the market left it unbalanced. So let's get rid of this. Let's go back here. And let's take a look at the 344s. Oh, it's crazy. I don't even have to scroll on my book map. It's so light today that... What's the range? 80 points? 80-ish points? I mean, that's about a quarter of the typical range on the IB. typically around 200 to 250 points. $60 AP. So pretty much a 15-point chart. That was what I was looking at. Yeah, see, like, and this is my higher time frame. So this is my weekly bands that I give you guys all on Sundays. And these are like that same level of defense that I was talking to you guys earlier about. It's the same thing, but just roughly 6 times stronger, 7 times stronger. So to get through this, it's got to go through, it's got to be high impact news, headline news, or multiple retaps of the same zone for it to get through. And that's just based on a year of me taking a look at these charts. And no one's asking me about the volume profile here today. You guys are always so observant on every little change that is made. And I didn't get one today. You got it, AP. Why is it so spiky? All right, so finally somebody noticed. So what I'd like to do on kind of weird days, you know, if you've got a shortened trading day, or you've got, you're into some pretty high volatility areas, but mainly I use it for like the day before Christmas, the New Year's Eve, any bank holidays that come out where there's like shortened time things. What I like to do is, and I know it's a little difficult to see, but this here is my volume composite profile, okay, which is set on the 45-day. This is how I trade every single day, is using that 45-day volume composite. Now, on days where it starts to get a little trickier, or you're going to see a lot less volatility in the market, throw a lower volume profile. So this is a composite, but this is set on a 3-day. So it can give you a little bit better view of what's happening today. Yesterday's gap op down, which was pretty dramatic. And then it'll incorporate Friday as well. So it'll give you a little bit of a, you know, I don't use this a lot. I use this with contract rollovers. I mean, I was even telling my wife our next vacations will be planned around the contract rollover, because I don't need to trade it. I've already have enough back testing to know that week and a half of the contract rollover is the most difficult time for me personally to trade with my strategy, based on volume. And, you know, I'm always looking to take a trade with an edge. And if the edge is not there, because you kind of have this hybrid of, you know, in the last case of a December contract with the March contract, you know, your levels don't line up anymore. Your lines don't line up anymore. Your unbalanced areas don't line up anymore. So you kind of have to incorporate almost a daily profile into your trading, because you need real-time data on the current contract that we're in. And that first week and a half is very tough. And it's historical. So it's like, it's the same shit in my journals all the time. So I told her, you know what? We never get to take like a good 1 week vacation. I go to Florida and I'm still trading. I'm still doing the YouTube live. I'm like, you know what? If we're going to go on a vacation somewhere, let's plan it around the contract rollover. I'll still look and see if I see signals, but for what do I want to force things for? I don't want to force things to, you know, to put a signal on or to put a trade on so YouTube could see, just to not get respected. I mean, that's stupid. And those are some of the, ooh, okay. Bookmap just went a little nutty. Computer started warming up. That's the first time all day. Why? Let's see why. What just happened? Had to have been something. Something had to have come out. Oh, I'm on the footprint. Now you can see my financial juice. Let's go to the main screen there. Let's put this here. Running out of real estate here. Trump won't say if he would use force to seize Greenland. 937. Okay, so exactly what I said to all my Discord members, my Signal members. Make sure you got some headline, which I didn't. I had it minimized on my lower screen. But Trump said that he won't say if he would use force to seize Greenland. So that was what you just saw right there. And that, if you're in a trade, you're in a short, fantastic. Shit, that was from our unbalanced area zone, so that gave you a nice little pullback. Here I was saying I don't trade the same place, but you did get a good footprint confirmation there. I just didn't get one on the higher time frame. But that trade could go against you real easy too, and it's not that you were wrong, it's just that, you know, a headline came out. I mean, there's no real protection against that minus your stop loss. And sometimes even in that scenario, your stop loss can't even protect you. So AP said, I have said it before and I'll say it again. Watching your YouTube stream has elevated my trading game. Thank you, Rob. I appreciate the kind words, man. I really do. That gives me the small piece of motivational words that at least what I'm doing is hopefully helping somebody out. Give me 1 second. All right, so I got a question on the Signal in the Signal group. How do you set the time frame on the composite volume profile? So there's two ways. On my composite profile that I use, I'm just gonna come up here just to show you. This is my normal volume composite profile here. This is set to the data series of my chart, which is 45 days. Okay. So that's how I set this volume profile, and I use the indicator from ChartSpots. For those of you guys who are watching, highly encourage you to watch the video that I'm going to release today on the changes in Discord and some of the resources that I'm putting in there. So it'll explain some of these things. But this is set to the data series of your actual chart, so which is 45 days. Now, what you're seeing down here, all these spikes, which I don't like. I don't like the NinjaTrader volume profile. I've made that very clear. It's just not as smooth and clean to me. But this is simply the order flow volume profile. And then what I do is I set it, instead of saying it, let's just look at it right here. So I set it to composite, and my look back period is 3 days. Okay, so then this is not running off of the data series of the chart. This is running off of the parameters that I set for the days to look back. You can do 1 day if you want, if you just want today's price action. you know, in a contract rollover period, the first couple days you probably want to be on a 1 day. And then after like 3-4 days, then you want to switch to a 3 day. And then like a week into the contract rollover, you probably want to be at like a 10 day and still have your 45 day, because, you know, you're still going to be going into areas where the previous contract is going to show you some volume that you know is correct. And then once you get to like that 2.5 week mark, as you guys saw what I did in January, then I just switch right back to my 45 day composite, and that's all I leave it on. But it'll help you understand the new contract volume versus the old contract volume. And I don't think that that gets really taught much out there. And then you could say, Rob, well, why don't you just always trade on the 3 day or the 5 day or the 1 day? I know that's a very popular, it's a very popular way of looking at the volume profile. And I know there's a lot of strategies. I think we've talked about that with the chat here. You know, there's strategies on the point of control. There's strategies on the low volume areas, playing the fades. How I trade and what I'm looking for is I am looking for areas in the market that have historically always had strong reactions. Because if you can pinpoint your trades into those are going to be your highest quality A+ setups. And then, you know, vice versa, volume's very powerful. I mean, even the volume from 1 day will show you a lot. And, you know, sometimes my setups that are not A+ still work out, as you guys see every single day on stream. And they might not align with the 45-day volume profile, but what I'm really looking at is I'm looking for, it's already met several of my conditions for my trading strategy. So, you know, a level on the 5-minute or the 15-minute, an impulsive move, a break of structure, which the way I look at break of structure is different than what I think a lot of people are taught. You know, I'm looking at break of structure as breaking a previous unbalanced volume area. And for that, it needs strength. And an area that has not been tested. What the fuck just flew in front of my face? And looking for areas that are not tested on the way down. So there's a few things that go into it. And then as I grow in the checklist of things, it makes it an A setup, it makes it a B setup, it can make it a C setup. So right now, the IB is the strongest area right now. And the IB, the strength looks like it's from the 245s to the 250s. So it does fit nicely into our 15-point strategy. Now, again, this could be another learning moment. You might want to cut your take profit and your stop loss in half. So instead of 15 points, maybe go 10 and 10 or 7, 8 and 8. You know, just because you're already the market strength is showing that it's at a little less than half today. Probably even less than that. Let me just see what. Yeah, 21. So we should be at around 40 to 45 ATR right now, just on an average scale. So we're a little less than half of that. So you need to adjust your strategies as well. Like I wasn't targeting 15 points on those earlier trades. I was targeting 10 points. But based on what I see in volume right now on the book map on level 2, the 45s to the 50s look very strong. And then there's really not much else to the top side that I see them wanting to really go after. This area up here, it's kind of a ways to go on a day like today. Yeah, I've got it on my trading view chart. Kind of stopped shading the NQs, played around with it with my weekly bands. I'm just kind of an OCD freak when it comes to my chart. I just really like it. I really like a clean one, and I know it helps me, but I've got the charts that are showing me where we're kind of at. The ES, I just left it up there because the ES doesn't really change. I mean, shit, I think this weekly band's been here for 2 weeks. We finally tapped into it. And good luck getting through that. And I'm super excited on how gold has been reacting to my areas. This gold is, I'm going to just say it right now, this gold is going to replace the ES very shortly as my secondary main. There's just so many trades that I can find every day on here. And they respect the areas so damn well. So I'm pretty excited about gold right now on the levels volume-based side. I believe gold lost today on the morning strategy. A good day to be on sim on that one. I'm going to say another thing too. I am absolutely loving the strategy that me and Grok developed, even though I think he had more part of it in it than I did. Handling the funded accounts. So I've been messing around with them for about 3-4 weeks here. In the beginning, I grouped up my funded accounts into originally four groups. I think I've got 24. 20 with Apex, 2, 4, 25. So 25 funded accounts. That was 24. Yeah, it is 24. So I had grouped them originally into groups of 4. And then what I was doing was I would trade one group. I would take a trade. And regardless of the outcome of that trade, I would then switch to the secondary group, which group would be called Group B. Take a trade on that. So staggering your accounts, which is popular. I've seen that on YouTube. But I then went to Grok and I'm like, all right, this is what I have. These are all my accounts. I just did a simple Excel spreadsheet, put the account numbers in, the account balances, what drawdowns are, what profit targets are, trailing loss are. And I said, all right, let's develop a strategy to trade these effectively, where I stagger my risk, and my goal is to take, is it bi-weekly payouts or bi-monthly? I never get that right. So every 2 weeks to get into a payout window. And it came back, and I also said I also want to have appropriate risk management on the thing. So it came back with this whole freaking analysis on it, and I followed. It took me 6 hours. I think I worked on that like 2 Fridays ago, or maybe a Saturday, and it took me about 6 hours to create this spreadsheet, which is 6 tabs. But the nice thing now is, because it was confusing, because especially how NinjaTrader works, if you've got an account that you're trading on, which is your leader account, what you guys are seeing right here is one window with 4 tabs. So I've got the ES, the GC, and I got my higher time frame NQ. I'm going to add a few more here in the next coming weeks. So, but the problem is that whatever account is attached to this NQ chart is also the same account that's on the ES and the GC. You switch one and it switches all of them. And it was getting very, very confusing to me, switching from one account to the next account to the next account, and then I would go into another account and it would be on a different ATM strategy, and it was just a pain in the sack. So what I did was I grouped them now into groups of 3. So the average group has got about seven funded accounts. And I still have, so it's day 1, day 2, day 3. So on day 1, I trade my first set of my first group, and all the trades are on that group. So if I take 2 trades, if I make 1,000, it's spread out through that. If I make $2,000, it's spread out through that. And if I lose, it's spread out through that. And the beauty of that now is that one, you know, I know that it's super sexy to copy trade 24 accounts. I don't think it's sexy at all to show a P&L like this session P&L that you guys see on this chart over here. It's not. I personally think it's douchey to show $20,000 of profit or $10,000 of profit when that's nowhere near what I would trade in my personal account. You guys all know on my 2 personal accounts that are also included in those 24 groups. Oh, that's why it's 26. In my personal account forever, I was always trading 1 E-mini forever. And then, you know, when December came, actually the last week of November, December came, I already started seeing, hey, you know what? You know, volume's not reacting well here. We had the contract rollover, just a lot of weird things. And I kept repeating it and repeating it and repeating it. And I'm like, okay, I'm gonna reduce risk. So I went down to 5, 4, 3 are my ATM set on the micros now for, and I do that across the board on all of them, on my funded accounts and on my personal accounts. And it helped me. It helped to keep December to a manageable loss. I think in December, I ended up losing, I want to say $2,000 per personal account. So I think I took a $4,000 loss in December. I probably blew a few funded accounts early part of December, just because I was still trading on the E-minis. And so the beauty of the staggered system is that, you know, even if you have a bad day, and let's just say you're a newer trader and you still have some bad habits and you get into that revenge trading mode, let's say you go on tilt and you have a bad day. Well, now you're not blowing all 24 accounts at the same time. Now you've just maybe blown 5 of your accounts or 7 of your accounts, and you still have 2 groups left to go. If you're consistently a decent trader with a decent edge, which I like to consider myself in that category, and you're profitable, even if it's small, the small wins, especially on this balanced approach. Like today, I took an negative 850 bucks on that first trade. I didn't give a shit. Did not care. The rest, 75% of my accounts were still flat today. So it only affected a small sample size of my funded accounts. And now I took another trade. It won that trade. So now I'm down 277. When you divide that by 7 accounts, what am I down? I'm down an average of $31 per account, including my cash. My cash is down $24. Oh, today was day 3. So today was trading both of my cash accounts. You guys probably heard that reasoning that I gave, but I'll explain it again. So both of my cash accounts are both down $24 and $25.30. All the Apex are down $31.74. Tradeify is down $36.90. And my leader account is down $348, which is an eval. It's a $300,000 Apex eval. And that is not included in this P&L because, again, it's not real to me, so that's not included in there. But the beauty of it is that you get one group to your profit target to take a payout. Okay, and then those 7 accounts at that point. Let's say you request payout maybe on 4 of them, because the balances are a little different on some of them depending on when they're added to the group. But let's say you take 3 of them. Well, now that group doesn't get traded until the money's into your account. But you still got 2 other groups that are on a calendar day, every single day, trading for you as well. And if you have a bad day on one, you're not having a bad day on all of them. And I love it. I really, really love it. I think it's a very smart approach to risk management, and it's a smart approach to securing payouts. And then the funny thing was, so today's group 3. They just make sure. Well, it has to be, because day 3 is always my. So the funny thing is that, you know, I told Grok, I'm like, okay, how about, so the way that it all started was group 1 was on a Monday, group 2 was on a Tuesday, group 3 was on a Wednesday. But obviously that changes as the weeks go on, because now they're going to start to overlap. So now it ended up being that Monday was day 3, or my group 3. So I said, all right, well, what about, since we're doing 1 cash account per group, so I think I have my cash account secondary on group 1, my main account on group 2, and then I'm like, all right, well, what if we add both of the cash accounts on group 3? Because I've been trading with the 2 cash accounts every single day. It copy trades to both of them for the last 4.5 years, or 3.5 years. And well, he said, well, this kind of goes against the risk management profile of what we're trying to do, you know, of spreading out the risk between the accounts. And I'm like, it's smart. He's right. I did override him on that. So every 3rd trading day for me has both cash accounts attached to it. And the beauty of it, last Wednesday I made, I think it was my like a $1,900 day. So on both cash accounts I made, I think it was like 100 or 100, I can't remember, but they were both multiplied on that. And I was like, see, I was smart. Now today they're both negative. One's negative 25, and I think the other one's negative $20 or something like that. 25 and 24. But that's peanuts in the grand scheme of things, especially how I have traded for the last couple of years. You know, a $100 day would have been a $200 day at full position size. But you give what the market gives you. And I'm getting very close to going back up to the same position size of the 1E mini, because I know for a fact that the way that I've been seeing the market the last 3 weeks have been dramatically improved over December. All right, let's see what happens here. So I'm currently on a kind of a weird one. I'm on a 10-point take profit, 12-point stop loss. I'll probably adjust that a little bit. Maybe I'll see what hasn't been balanced out yet. Right here. This is open. They might come after that. They could come after this. So both these little areas here are areas of targets for us on the EIB. I know those are pretty big. But again, the more unbalanced areas that they leave below you, the better. The better the conviction you have of getting your full take profit. That's the way I look at it, at least. So I did get a question from Nordic. How many days do you spend on evals? It depends on the firm that I'm trading the evals on. Apex is one trade. One trade. I either want to pass them or I want to I pass them or fail them and reload them. Because if you're picking up an Apex eval at 19 bucks, which I think now they're at 80%, so maybe it's around 30 bucks or something like that. And, you know, all in on an activation, you're at $79 or $100, somewhere in that area. You know, for me, I want to get to the PA account as fast as humanly possible. In fact, I've got 20 PAs right now, and I have 2 PAs that I can activate that are also in the funded, not the funded, but the pass stage. That, you know, if I was to ever blow 2, that I could just add right back into it. But I want to get through those as quickly as possible. Now, with Lucid, they have 2 different types of trades that you can take, or 2 different paths. Let's see what happens here. Give me 1 sec. Let's, oops. Footprint's not on the right. There we go. Let's just see what the higher one is doing as well. I don't have the IB on the higher, son of a bitch. Okay, we most likely would not get a footprint here yet. We haven't tapped into volume. There is a lot of juicy volume sitting right above us, so till about the 55s as of right now. All right, let's see. It's positive delta, red footprint here. If this closes as a red footprint candle, I would be into this trade. We'll see what happens. Not super violent, but then again, they also could retap into like the 50s. So you got to have that on your radar. Okay, so no footprint confirmation there. Still positive delta, tapping into that bigger area. Now let's see if the sellers come in or not. If we could flip this candle, that would be fantastic. I think we're going to. Hopefully delta. Okay, so we flipped there. I'm in. Let's see if we can get a quick reaction here or not. Now, I will say that the book just cleared out pretty strongly, so let's see. But again, it was my rules. My rules said to got the footprint on the lower. Don't think I would have got something on the higher here. No, there's not a footprint on the higher here, but let's see. I got about 12 points of risk on a 3 micro, so smaller scale for me, smaller position size for me. I don't want to really see it hanging around here too long. I've already kind of told you that these 2 areas here are some bigger targets. So it also kind of gives me some conviction that we should get a decent push to the downside here. The next unbalanced area is still kind of a ways away, at right around the 390s. So, I mean, if the market wants to make that push, then it's obviously going to knock me out. I have nothing, I can't control that, but it fit my entry confirmation criteria. It looks like it might come after me here. Seems like every time I go to the Be right back screen. I get my stop hit, so I'm not gonna do that again. And not much selling pressure right now, unfortunately. Not much at all. Could see a quick spike to the 70s as well. There's obviously some volume that's going to be unbalanced here. Now, your other scenario here that could play out is you get another bounce at the IB high. So, you know, this is a scenario where if you want to go to break even, you're probably going to get stopped out at break even pretty quickly. You can give it some space, but I got 12 points of risk up on, so probably about 800 bucks of risk spread out. Again, here, break even, you know, I'm not a huge fan of break even, but rarely do it on my trades. You know, I like to see some really strong conviction, then maybe I'll go to break even. But if you go to break even right around the IB, you have a very high chance of getting stopped out. I mean, obviously this trade doesn't look very promising right now, but it's at least, it's held. Let's see if it... we might get a strong push here to the 70s. This could get a pretty strong spike right to around TP2. Same tap of the same area. And the markets are obviously, they're very thin right now, but you know, they're thin on both sides, so it's not like, hey, don't take the trade because you're trading in super thin markets. It's really to both sides. It's obviously, this is a little better than a coin flip here. Obviously got knocked out there, but, and I would think that it would probably test this TP2 area. But it fit what I was looking for, fit my criteria. I saw a lot of volume in the order book here. We're sitting right at the IB high, so I thought it was a good play. Didn't work out, but... And now we're going to be going into this kind of bigger chunk of volume here, so this should get a little interesting. And I would think that they would be... this would be a pretty high area of reaction. And my loss of the day at 944 is less than what my one loss would be of a normal trading day. So for me, I've managed risk, I think, pretty well. So now let's see here what, if anything, we can get. Might not give us anything, but we'll see. So that was the move right exactly to the 70s, like I told you guys right here. I would hate for this to give me a footprint confirmation right here because I'm not ready for it right now. I'm not ready for it yet. But that might be the move. We'll see. Maybe tap in somewhere around the 85s. Somewhere right around here. Came about a tick away from our... of our go zone. All right, we're in our go zone here. So now let's see if we can get some sort of... And in this area, I definitely would like to see a higher confirmation. Probably, I'd want to see some type of conviction here from sellers. But I don't see them ramming through here. So I am currently on, this footprint is the 60 range, so each candle is equivalent to 15 points. And on that particular IB setup, I would take that trade every single day. So that to me fit the bill really nicely. Saw a good level of defense there. Got a footprint confirmation on the lower. Did not get one on the higher, which again, I guess you could say, you know, this higher will save you more than that. But sometimes you don't get that play on the IB. What the hell's floating around here? You know, the lower time frame, the 20 range, is not showing me really any indication of a flip yet. Might see one here. So now we're getting into this kind of juicy area here. All right, that was the first lower confirmation that I got right here. Sorry, you guys can't see that shit. So this is the first footprint confirmation I see on the lower. Let's see if the higher follows, and I'll take this trade. No, I need to see a little bit more positive delta though. Let's go. Flip this one red. Flip it red, buddy. Flip it red. Oh, shoot. Sorry. Yeah, 400s are strong too. Not as strong as the 85s though. This is where all of it's concentrated at. Let's see, let's see, let's see. I mean, the buyers have been pretty impressive, though. I will say. They have been pretty impressive. Not much in the way of pullbacks here. All right, so it looks like the lower just flipped. Let's see if I get something on the higher here. Come on. I think no matter what, even if I get into this trade, it's going to probably make me sweat. I don't think this is going to be a quick reactionary point at this point. But it's in an area that I'd be very interested in a flip here. And then we'll kind of see if the lower, if this lower holds up. Because that's what you want to see. You want to see this hold. Well, 360s. That's where they're gonna complete this auction at. So let's get this as a TP here. It's pretty close, but it's right there. This will be the completion of the auction here for sure. So the last thing, and what I would like to see it do, which I think might close out this footprint, which would be a shitty situation for me, but might tap into the 85s. I'd rather tap in now than I've gotten a footprint right here and then just to see it retest, because my stop would have been right somewhere right above here. Let's see. Stay patient. And so far, the lower footprint has still held. Like I said, the 85s, which are right here, is an area that they can definitely want to target. Delta's going to start dying off here too, so we're going to start probably getting into the... Oh, they're still coming in strong. All right, let's see. A test of the 85s. I'd like to see a sweep of the 85s and then a footprint confirmation, target the 360s. That would be the playbook here. Got to do something here, buddy. This is not super ideal if we get the footprint here. It's not super ideal because they leave this 85 untapped. But we'll still take this trade because I have a lot of conviction on the 360s. Which gives us about... it's only going to give us about 10 points, but... Okay, so Delta is still negative. Not the best footprint confirmation yet. No. Nope. No confirmation from me here yet. They're going to take the 60s, though. It's either the 60s right now or a retap of the 85s down to the 60s. That's the most simplest auction theory that you're going to find. You did get a confirmation here on the lower. But again, I would have had more conviction on this trade if we would have tapped it into the 85s there. Might go without me. Come on, you know, you're not going to leave the 60s. Just go. Do it. There you go. So played out almost perfectly, but did not get the footprint confirmation here. Did get it on the lower right here. It was actually a very nice one. I don't know why this chart gets so difficult to... Yeah, right here. This guy... no, it wasn't that guy. Which one was it? This guy. Right here. That gave you your footprint and nothing ever retapped into it. Alright, well, that was an opportunity to almost get back to break even, but again, just did not fit exactly what I was looking for there. They really kind of jarred it here a little bit with the 85s scenario. Granted, resting limit order here, great. I would not have recommended a resting limit order here just because of how wide this area was. But it served its purpose and aligned pretty well with the 3-day volume. All right, guys, I think I'm going to call it a day. Got a little bit more action than what I was expecting on a bank holiday. Still had fun. I know down 944, but spread out, I think I'm down maybe $100. Let's see. Yeah, I'm down about 105 on all the Apex. The cash accounts are both down $100, and the Tradeify is down 113. But it's manageable. It's just one day. No big deal. No big deal at all. All right, guys, I'll see you guys here tomorrow at 8:30. For those of you that want to watch me chart my 5 and 15-minute levels, just get onto Discord at 7:45 a.m. Central Time, and you'll see me do that in action. So that'll be a good maybe learning experience for a lot of people as well. That'll help you guys out. And then for my Signal members, I'll stay on with you guys for a little bit here and answer any questions. Take care, guys. Have a great one.